You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome to the show, Tim.
Jim, thanks again for having me.
I know it's rare for you to dig up charts concerning the Canadian dollar, but the loonie has been plunging like a real water bird looking for some bottom-feeding fish. Anything on your charts to talk about that?
Yeah, Jim. Talk about impromptu. I have to say, you put me on the spot asking me about the dollar. Canadian dollar. I didn't even know it was in my database. But looking at it, it's just structure, so it's no big deal to talk about it. And sometimes your first impressions are the best anyway. But in looking at that chart, I mean, as a broader statement, I think the reason we're seeing obviously some of the weaknesses in other currencies and so forth, the euro and the Canadian dollar and such, is that, it's the inverse relationship with the dollar. And the dollar, like I said, been making a very, very important longer-term bottom, and obviously that's come to pass. So we have one moving against the other type thing. But when you look structurally at the dollar or Canadian dollar, what I see is, in a healthy market, you look at cycles of like degree, and you want to see the cycles of those like degrees stair-stepping up or stair-stepping down, whichever the case may be, and then you look for the shift for that to change. In other words, if you're moving up, you want the cycles to be right translated with higher highs and higher lows of the same degree. And then when you see that shift to, a left translation where you see a low of the same degree violated, then you know that trend has changed. It can be a very subtle hint, but up front by looking at the market in, at different tiers or levels, if you will, or dimensions. So that being said, as a little bit of background, what I see here is, the dollar as the, back in 2000, 2001, 2002, the Canadian dollar made a major low between 60 and 65 range. And then it ramped up incredible move up to like 110. And of course the structure of that on the way up was very, very positive. We saw the correction and the decline of that cycle down into 2008, but even then, nothing had really happened to break the structure, if you will. It was just a correction, and looks like maybe 50% or so, just eyeballing the chart, of that advance out of the 2002 low into that 2000, looks like 7 or 8 high. But then where the problem came, looking at it cyclically, there was a warning. There's always a warning. You always get a structural shift, a structural warning. And looking at the cycle of like degree, what you saw was coming out of that low in 2008-9 was a what I call a failure. In other words, that cycle couldn't move back above the cycle of the how do I say this? That cyclical advance was of the same degree as the advance coming out of the 02 low, but it was a failure. It couldn't muster up the energy to go back above that high. And then as I throw my indicators on it, the trend indicator and the CTI and so forth, it confirmed that failure. And so the transitional shift with the structure happened. So it warned you then that something was wrong. And then when you look at the shorter term cycles, you had a little low in 2011 with another failure. So you had a failure within a failure. And those little subtle things, I mean, people looking at that, not understanding what they are looking at, you can miss these subtleties, but that structural signature told you that the Canadian dollar had rolled over. And obviously the rollover has continued, and now it's getting everybody's attention. We had the exact same structural shift happen in commodities back in December of 2013. And I guess the point in bringing that up is that the structure, the cyclical structure of these markets is very, very, very important. In December 2013, I wrote about the CRB index and that same structural or same type of structural shift and the DNA markers associated with it, that we had seen the top in commodities. and they started drifting lower and so on and so forth. We had further confirmation throughout 2014, and they finally just fell apart. And so I guess the point there is that with any market, it doesn't matter if it's a Canadian dollar or the U.S. stock market or what it is, you structure is key. And it's all in the charts. It's all quantifiable. And when you go back and data mine some of this data, you can wrap statistics around it and so forth. And I haven't done that obviously to the Canadian dollar, but I'm still just looking at the structure. And so what I'm saying is that's key. Those same keys is what we're looking for to occur in the U.S. stock market, in the Dow Jones Industrial Average. We're seeing some structural issues in some of the other indexes and averages. Are those structural issues going to be mended, or are they going to bleed over into the other averages, at which time I think that it'll bring the longest 4-year cycle advance in stock market history crashing down. So I guess the point in all that is that structure is key.
So what does it look like the Canadian dollar is going to bottom out at, or can you tell?
I can't tell. I can't tell that. I haven't done the research on that. Once, that's part of that DNA marker stuff. If you do, you have to go back and data mine these things, and just looking at it, I can see the cycles. Looking at it, I mean, they jump off the chart at me. But as far as getting some sort of an indication of where it's going, that takes a lot more research than just looking at a chart. I don't know. I can try to do some research there if you'd like me to.
Sure, but from what we've seen so far, a 75-cent Canadian dollar wouldn't be unrealistic, would it?
No, it would not. I mean, I could see it, and I'll say this. I need to work on the cycle for you a little bit more and identify, the average duration and that sort of thing. But when you look at the fact that the advance out of the 09 low was a failure, 08-09 low was a failure, then the general tendency is that you see a move to or below the starting point for that cycle. And so that tells you, just in kind of general terms, that the longer term direction for this cycle would be that you would go back to that 08-09 level or below. So in general terms, I guess I can give you that much, but beyond that, it needs to be kind of dissected.
And because the fate of the Canadian dollar is so tightly tied up with crude, we'll take a look at the crude oil cycle when we return with Tim Wood.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, we've talked about the Canuck buck and its sorry slide. What's happening with crude right now? From the charts I was taking a look at after a long, very fast slide, it looks like it's trying to stabilize around the $48 mark.
Yeah, it is trying to put in an intermediate degree cycle bottom, short to intermediate degree bottom. There's no question it's trying. But, so far, those attempts, if you will, have all been failures. And when I look back at a chart, which I'm looking at now, you look at, there was an attempt for a low in September, then another one in October, and then another one in November, another one in December, now another one now. And what you get when you look at the chart is you have the short one. I talked about the dimensions. The short, intermediate, longer term is what I'm referring to when I say that. And if you look at the longer term, within the longer term trend, you have the shorter term cycles. And, there's a cycle that averages about a month. And when you look at it on the chart, you'll see as crude oil is stair-step down, it'll try to get a toehold with one of these little short-term cycles, and it can't hold because the structure, like I was talking about earlier, the structure is what you call left translated. It's indicative of a down trend, and that structure has not changed. And until it changes, it's not going to get a toehold. It's going to continue to fail and slip. Well, we're at another one of those opportunities. You move into a short-term low, and every time you move into the short-term cyclical low, well, that's an opportunity. It's an opportunity for that structural shift to occur. And so far, it hasn't. And so what we have to look for is, do we see structural evidence develop that tells us we have that higher degree intermediate term cycle low in place? Well, I don't know. I mean, that's a crystal ball thing. That you have to see that happen. All I know is that we're at that window of opportunity where it can. Now, we may see that develop. We may see evidence that it fails. If it fails, then we're going to get the next stair step down with the next cycle. And you ask about price targets and that sort of thing. And going back, I have done that research with crude oil. And I think the ultimate target for crude oil, I think it's going well into the 30s. And that's just based on statistics, math, and historical relationships. And there was some stuff in the last research letter that spells that out in a pretty profound way. So what I'm saying is that any bounce that we do get here is just that. I think it's a bounce. There's a seasonality factor that comes into play. I don't know if it's, in a strong trending market, sometimes those things are overpowered. But from a seasonality perspective, you tend to have, lows this time of year and then higher fuel prices into the May, June, July, maybe August time frame. I guess that kind of corresponds with the summer driving season, and then weaker prices after that. So there is a seasonality factor coming in. But again, to me, from my seat, what I need to see is structural evidence of an intermediate degree bottom. And then, like I said, though, it's just a bounce because I think crude oil's going lower.
Tim, anything else you wanted to throw in?
No, Jim. I guess so. I guess if you kind of sum up this interview, the direction it kind of went, you never know really what we're going to talk about till we get on the air and start talking. But the point is structure, I guess, of the day. You asked me about the Canadian dollar and I ended up talking about the structure, and you talk about crude oil, and, like I said, I mean, it's in print. You've got it. You've seen it. It's December 2013. Identified the cycle top in commodities, the CRB index, and said what was going to happen. And then again in August, talked about it in the August of 14 in the research letter, and it was all based on structure. And so I said that to say this. That structure applies. It doesn't matter what market it is. It does not matter. Structure is structure. And either it's a positive structure or it's not a positive structure. It's that simple. And so in applying this to equities, what we have is a very, 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 very overextended market that has, the structure has by and large been positive until 2014. In 2014, we started trying to see some structural shifts, but then they wouldn't just like this bottom that we're sensing here in crude oil, it would try to make a little top, and then it would fall through. And equities would continue higher, and then it would try. So until 2014, we saw nothing. In 2014, we started seeing these cracks appear, trying to top, but it couldn't quite materialize. And so what I'm saying is that given the duration, the longest 4-year cycle extension ever, and I say ever since 1896, the inception of the Dow Jones Industrial Average, is underway in equities. And all that has occurred within the context of what I believe is a secular bear market based on volume data and other underlying economic stuff that is in an article that I think you guys posted a week or so ago. And so what I'm saying is that once we see that structural shift and it's confirmed, then it's done. It's over. There's nothing that can be done. It's like the falling of night. I mean, it's done. It's going to stay night until the sun comes back up. And so once that hard structural shift occurs, then we're going to have the 4-year cycle top, and the unwinding of this madness is going to be inevitable. It's going to happen. And so it's that structural shift with equities that we're watching, just like with crude oil, the Canadian dollar, or anything else. And so that said, it can, I don't know how long it's going to continue, until we get that, ultimate top. But when we do, we do. And the structure will tell us.
Tim, thanks a lot for chatting with us.
Jim, you're welcome.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net, or check out our popular YouTube channel at Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.